Hello traders and welcome to another video review. Today is Monday, September 11th, 2023. Let's find out what's going on with the Forex economic calendar today. As you can see, there isn't any very important data releases scheduled for Monday, but we got some medium important data scheduled for release. New loans from China had been published overnight. As you can see, that beats the expectations of 1 million and 1 billion 200 millions, and the actual reading was 1 billion 360 million. So very unexpected data from China. CPI from Denmark going down from 3.1 to 2.4%. Unemployment rate in Turkey is scheduled for release at 9 o'clock. The previous reading was 9.6%. Bank of England MPC member Peel will give a speech at 10 o'clock. The Brazilian central bank focus market readout will take place 25 minutes after 1 o'clock, and at the end of the day at 7 p.m. we got 3-year note auction from the US. Current level or is 4.398%, right? So that's the current 3-year note auction level. As you can see, not too many important data releases, so maybe we should just jump to the main pairs and see what are the current main pairs are doing. What is the technical picture of the current main pairs of the Forex market? We are going to start with euro-dollar. Euro-dollar for our chart is showing us another signs of the deterioration. As you can see right now, we are closer and closer to the level of the technical support, the important technical support. As we know, this level is located here at 1.0636. So that's the key technical support. There is no doubt about it, and the market continues the movement to the downside from this swing high located at 1.1276. So that's the top of the range. Of course, just to remind you guys, please notice the fact that we are following a very strict technical pattern. Let me just find out where it is. There you go. The pattern is head and shoulders. So that would be our left shoulder. That would be possibly our there you go, head, which was located at the top, and then we got our right shoulder done roughly around somewhere here, and then of course this is the right shoulder. So neckline was violated already, so that dashed blue line is the neckline. As you can see, we have hit the level of 1.0687, but this might not be still the target for the head and shoulders, because our target, if we take the, let's say, price range, okay, so the price range of the head, from the top of the head of this pattern to the breakout of the neckline, is minus 3.22%. If we copy this, we can clearly see that our target is way below the current technical support. Let me just move it slightly higher. There you go. So our target would be still located roughly around the level of 1.0550, 1.0547. So this is the target from the head and shoulders pattern. So that movement to the downside has not been completed yet, despite the fact that just recently we got very nice spike up in the momentum, but this spike was made after the euro dollar hit the extremely oversold market conditions. So that doesn't actually mean this pattern is now invalidated. So let me just make it a little bit more there you go, visible for you guys, so you can see what is going on here. And this one I will make red as well, because it's a downward pattern. So that's the situation for the whole week on the euro dollar, unless the market will do it way faster than usual. Nevertheless, head and shoulders pattern is being continued, right? So now let's jump to the pound. So the British pound 4-hour chart is looking very similar to the euro dollar, but in this situation, as you can see, we have broken already below the key technical resistance, right? So now is support, sorry, so now it is a resistance, so that's the red line, and we got the we made a new low here. So it's a kind of a very interesting zone here between 1.2547, 1.2588, and one more level that can be added here for a even more precise zone, labeling 1.2620. So this is a big supply zone consisting with 3 different technical resistance levels. So where is the support? Of course, the support is lower. The swing low support, the last swing low support is 1.2310, and this is the target for the bears. This is where they are pushing this market right now. Please notice the fact that again we just bounced towards the level of 50 on a 4-hour chart from the extremely oversold conditions. Those conditions were made roughly around this level here, 1.2444. So we got something like a double bottom for a bounce, but this bounce is still the bounce just like a internal bounce during the down move. So in order to rally, the British pound must break way above this this zone here. The zone, let me just make it a little bit better for you. I will make the rectangle, the zone which now will be the red zone. Okay, so this is our zone. And of course we need a breakout. We need a breakout above it, otherwise it will be very familiar situation for the bears and unfamiliar for the bulls, because they will not if they will not break above this zone, most likely another swing low will happen, another reversal will happen, and then the target, the swing low from the May 25, 2023 will be hit sooner or later. So that's the main zone right now for the British pound. Whatever happens here is just a pullback, attempt to pull back made by the bulls. So the situation on the British pound is quite clear. There's no doubt about it. We are still under the bearish pressure. So let's find out what's going on the Bitcoin market now. What is going on here? On the 4-hour chart of the Bitcoin, we are still bouncing from this technical zone. So we got this technical support level. We got even one more, if you want to be a little bit more precise. There is one more just here, 25,333. As you can see, it's been tested 3 times already. We got some kind of a bounces, but then very shortly the market returns back to the trading zone. The level of 28,136 will act as the technical resistance, and the nearest technical resistance, despite of the fact that we are having one here at 28,000, is located at 26,446. So that's the next technical resistance. And right now, if we place like a kind of a short-term trend line here connecting those two levels, we now know that the market is under this line and there is still plenty of the room to move lower. So if we just focus on the newest data from the market, if we just make our let's say chart just like this, we already know that we are trading in between 50 and 100 periods moving average. We are still kind of below the short-term trend line. So in the nearest time, it doesn't actually look like any sort of the bounce to the upside should take place. The momentum is roughly trading around the level of 50, but very often it's under this level. It's not very deep. It's not very deep movement under the level of 50. 41 points was the lowest level. As you can see, we are now coming back towards the level of 50. So neither bulls no bears are in charge of this market. However, in the background there is very strong, very clear and visible bearish pressure. Every attempt to move higher is being faded. Every attempt to rally is being faded. Every bounce is being faded. So the bearish pressure is very strong, and we should prepare for another test of this very narrow technical support zone, and then breakout lower on the Bitcoin market. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.